Hi, your little guy here, the unknown. And honestly, I've realized that most people are still struggling understanding the 1, 2, 3. Okay, don't complicate things. Okay, 1, 2, 3. I'm gonna explain it as hard as I can. Okay, I'm gonna try to make this one as advanced as I can. I want to clarify all the confusions. Okay, here's how this works. Okay, everything is about 1, 2, 3. Okay, 1, 2, 3. We have already explained why. Okay, now here's the thing. It appears in two ways. Okay, there are two main ways in which the 1, 2, 3 appears. It appears as 1, 2, 3 in terms of breakout traders in the market. Okay, and it also appears in terms of a weekly template. These are two separate setups. Okay, two separate setups. Okay, so here's how it works. Based on the breakout, we're gonna go to our charts to actually look at this. Okay, now as you can see, I have my vertical lines here, my vertical lines in blue. This actually separates the week, so this is 1 week. Okay, I'm on a 1 hour time frame, and this is the best time frame to actually do your day count on because it has less candles in. However, you can see how they behaved, and I will show you that in a minute. Okay, which is highly important. Okay, so here's the thing. These are these are my vertical lines, these dotted vertical lines. Okay, this one actually show or separate the days. Okay, these vertical lines, the dotted one, they separate the days. In other words, if this blue one separate the week and these dotted black ones separate the days, it will be Monday here, it will be Tuesday here, it will be Wednesday, Thursday, Friday. Okay, and now I have these horizontal dotted lines. These ones show the low of the previous day and the high of the previous day. That's one thing you should understand, the low and the high of the previous day. Okay, okay, and later I will be introducing other indicators. Okay, so right now I'm only using one indicator. I can even take out this okay, let me delete this one. So I'm using only the daily high and daily low indicator currently. Okay, so look at this. This market has been going down for a number of days, 2 weeks. Okay, so all of a sudden it consolidates here. Okay, now it just goes sideways for 1, 2, 3, 4 days. Okay, and let's go back. What is consolidation? Okay, consolidation is trapping volume. In other words, market makers are gathering orders. Okay, they are, if they are buying here, they are prompting everyone to sell. Okay, so they are gathering orders up and down. That's consolidation, and one way or the other they are gonna hit stops down and then they can go up, or they will hit stops up and then they will go down, or they can just hit stop both sides and still continue gathering orders. So I don't want to be in a market that is consolidating. Okay, because you never know if the low is locked or the high is locked. Either extremes might be broken. Okay, so now that we understand this, as you can see, now this market was just ranging. Okay, we have three types of markets. We have a market that goes up, it's an uptrend. We have a market that goes down, it's a downtrend. We have a market that goes sideways, it's consolidation. Okay, so you must bear that in mind. Okay, so now we have a day one. This is our first green day. Look at how it closes. It's our first green day. Okay, a green day simply means it's the first green candle on a daily time frame after many candles that were red going down. Okay, after many consecutive red candles, now we get our first green candle. And for it to be a first red day, okay, this is why we use the hourly time frame. Okay, or a smaller time frame like a 15-minute time frame to actually see a first green day. Okay, or a first red day. The reason is it must peak down first, and the main objective for peaking down is trapping volume, okay? Because the main objective of market makers is actually to trap volume, okay? That's their main objective, okay? They want to show you down, 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 so that you can actually sell and they will be buying, okay? Because for one to win, one has to lose, okay? So that's the thing. That's the thing. A first green day must have a peak. This is the most important thing that most people tend to ignore. There must be a peak, okay? If there is no peak, it doesn't matter if it closes above, okay? It's not a first green day, okay? It must have a peak. It must start by going down. I'm not saying it must break, but I'm saying it must start by going down. Open, go down, down, trap volume, and then move away from that volume and close high. I repeat, the peak is highly important, okay? Now we have a first green day, which is our day one of breakout traders. Why? I already told you that these lines, these horizontal lines, represent the high and the low of yesterday. Let me just show you, quite simple. You see, this is the high, okay, of Monday, and it will be shown on Tuesday using this dotted lines, okay? This is the low, hence you see these dotted lines here. This is the low, hence you see the dotted lines here, okay? This is the high, hence you see the dotted lines here, okay? So I just want you to understand these indicators, okay? This is the high, and that's why you will see the dotted lines here. This is the low of the previous day, hence you see the dotted lines, okay? This is the low, hence you see dotted lines. And guys, I want this video to cater for even those who are new, hence I really won't be concentrating much on the time or anything. I just want to make it as detailed as I can, okay? So here's the thing. Here, this is the low, this is the high, okay? So for us to have a day one of breakout, guys, if it's going up, it must break the high of the previous day, okay? The high of the previous day, okay? The high of the high of the previous day, okay, must be broken, okay? This is the high of the previous day. Let me just show it here. This dotted line, it broke to the upside. This is when we start counting, okay? It made a peak, it broke, okay? Some green days will be inside days, therefore we will start counting the moment they broke the high. It doesn't matter. Say for instance, if this day closed here, it was gonna be a first green day, however it was not gonna be a first day of breakout traders, so we were not gonna mark it as day one breakouts. Why? Because it would have not broken the high of the previous day, which is highly important, okay? So here's the thing. If, say for instance, this day closed somewhere over here, okay, it was gonna be a first green day, however it wasn't gonna be a day one breakout. For it to be a day one breakout, the following day we would expect it to actually break this high, which will be the high of the previous day. Then it was going to be day one of breakouts, okay? So I hope you understand, and I will also demonstrate this further in a moment, okay? So this is day one of breakouts, okay? Let's go to day two of breakouts. Based on my broker, I always use this line. As you can see, it opened on Sunday with a gap, so my day one was here. So this was my day one. However, my high of the previous day was here based on my broker. Some of you won't have this, okay? I also use Exness. So on Exness, I don't have this, okay? It doesn't open on Sunday night, okay? It opens at the same time with other countries like the US, okay? So I don't have this line. I just want to make sure that if you are using a broker where you don't have these two lines, you understand exactly what's happening. Okay, so this is my high. Okay, this is my high. This is my high. Okay, so this becomes a day 2 of breakout. Okay, this becomes a day 2 of breakouts. Okay, day 2 of breakouts. Please don't make this complicated. Please don't make this complicated. Okay, this is day 2 of breakouts. Why? It broke the high of the previous day. For me, I'm using this indicator. Okay, so I'm not gonna confuse things. I'm gonna use this indicator. Okay, and now we are not actually talking about the actual opportunity. Okay, and now look at this. This one opens, it breaks, but honestly it's not really convincing. Okay, it's just one candle. Okay, it's not convincing, so I consider this to be an inside day. Okay, it's an inside day. Okay, an inside day is a day that inside let's just say inside day. Okay, look at my letters. Okay, this is an inside day. Okay, what is an inside day? An inside day actually is a day that doesn't break the low of the previous day and it doesn't break the high of the previous day. Okay, why? Because here's the thing that I prefer. If I have to guess, I don't want to do it. Okay, if I have to guess, now I'll have to guess if this is a breakout or not a breakout. Okay, so I just put it as an inside day. Why? Because I hate the guessing game. Okay, and I've learned this from people like there are many people who actually speak about this. Most people really hate the guessing game, and I'm talking about the best guys in the world. Okay, if you have to guess, don't actually be part of it. Let it pause. Okay, because it's a business. It's not gambling. It's a business. Okay, you have to sustain your business. You have to have rules. So if we have to guess, I count it as an inside day. And if we get an inside day, we don't count, we just pause to see what happens the following day. Sometimes you'll have an inside day that actually becomes a red day. Okay, however it must peak. Okay, that becomes a red day. So don't jump when you get an inside day. Don't jump. Look at what the following day is doing. Okay, so on the following day, we just pause this one. Okay, we pause. Okay, hope you understand this. On the following day, which is Wednesday, we actually get what we call a day 3 of breakouts. Okay, so looking at the strategy, we use two kinds of strategy. We want day 2 continuations or we want day 3. I personally love the day 2 continuations because trend is your friend. However, on a day 3, one of two things is gonna happen. Actually, it's gonna actually go up or reverse. Okay, go up or reverse. Most of the day trades will reverse. However, it's gonna go up or it's actually going to reverse. Okay, it's going up or it's going to reverse. Bear that in mind. Okay, that's where we will start talking about the setup. Okay, right now we are talking about signal days, the day count. Okay, we will get to setups and we will go much deeper and deeper. I'll try to make it as detailed as I can. Okay, because right now I'm not going to be looking at the time of the video. I'm going to be looking at how detailed it becomes. Okay, how detailed it becomes. Okay, actually now you see day 1, day 2, inside day, we pause, we don't count it. Either it opens maybe here or closes here, we don't count it. We only count the breakout of the previous day. Okay, so that's what we look at. Okay, so please bear that in mind. Okay, please bear that in mind. It's highly important. Okay, so here's another thing. Now we are on day 3. Okay, one of two things will happen. It will either reverse or continue or do nothing. Okay, or do nothing. Okay, so we will talk about the setups on a 15-minute time frame. Okay, so if it doesn't break, okay, what we actually do is we will start recounting again. okay, a setup, a reset, okay. Now it breaks day one. However, I'm gonna talk about the weekly template, okay. Remember I told you it happens in two ways, and you have to be able to take it jointly, okay. So here's one thing we're gonna do, okay. We are not talking about the weekly template, we are talking about day breakouts, okay. So this becomes a day one, okay. This becomes a day one, and this one will become a day two, okay. So I'm just gonna do this day one, okay, day two. And guys, if you look at gold, I think it's just going up and up and up. Why? Because of the war. We have a war where actually the US is actually involved, and most people don't know how the economy is gonna go, okay. Okay, so usually when there is a war, people run to gold because it's a safe haven for them, okay. They actually run away from the currency, the US currency, and they run to the gold. Hence why during wars, most of the time you will see gold going up, okay. So this is day two, okay. This is what? An inside day. What do we do on inside days? We do nothing. We do nothing, okay. We don't count inside days, okay. We don't count inside days. So here's the thing, let me just copy inside day, okay. This is an inside day. We don't count it, okay. We don't count it, okay. So if it's a day if this one opens and gives a first red day and it's an inside day, I don't want to be on the continuation part of it, okay. Why? Because I want to be on a continuation of something that has broken down and reversed, okay. Broken up or broken the previous day's high or low, and then is giving a setup for a continuation, okay. So now what are we gonna do? We're gonna start going back after an inside day. We just spoken about an inside day, so this is a good example where you get an inside day. An inside day is a pause, okay. So now what do we have? We have another day three of breakouts in the market, okay. So on this day we look for a setup. If there is no setup, what do? It resets, okay. Now they broke again day one, okay. Okay, they broke again day two. They broke again day three, okay. This is not based on a weekly template. I want you to understand they break out, okay, the breakouts. Why? Because sometimes when we go to a weekly template, you'll find that, okay, a move actually started on Friday. It gave a day one breakout on Friday. Tuesday it gives a day two breakout, and then Monday actually starts on Friday, goes to Tuesday, it goes to Monday, Tuesday it gives a day three, and on a weekly template you'll see it's completely different. So this is why I'm showing you this, okay. So now this becomes our day one again, okay. Day one, it's a reset because this market just continued up, okay. It continued up, okay. So this becomes our day three in terms of breakouts, okay. This is breakouts. I hope you understand now. I'm not talking about the trade or the setup. I'm talking about the signal day. I'm talking about the day counts. Day one, day two, day three, okay. Inside days we do nothing, okay. The only time we will put day one is if the inside day is broken, okay. That's when say for instance, if this gave a first red day, yes, and then the following day it broke down, that means it would have broken this low. Therefore we were gonna have a day one breakout to the downside, okay. But as you can see, this market is just continuing going up, okay, and it's not even breaking any structure, okay. Do not sell if we don't have a break-in structure, okay. Let me talk a little bit about breaking of structure, okay. Okay, I know that's not the main objective of this video. However, as I said, I want to make this as detailed as I can. Look, market structure. You do understand market structure, right? If you don't, it's fine, I will explain this. Look at this. This is the low, okay. This is the low, okay. This is the low, okay. They make a low, they make a high, okay. they come and make a low, okay, and then they make a high. We are on a 1 hour time frame, remember, okay, and then now we only have a high when the previous high has been broken, okay, let me show you something, and this is important. Please, you must understand this. This is our low, okay. Okay. Wait a minute. Okay, fine. This I'm gonna be using the. Okay, let me use the box because it's much easier to use the box, and I'm just gonna make it. Okay, use a different color that will actually stand out. Okay. No, I don't want this box. I want a full color box. Okay. So here's the thing. This is the low. Okay. Why is it the low? It broke the previous low. This was the last low. It was broken. Okay, just know that we have major lows and high and minor lows and high. And one person once made a good example. If you are in a flight, okay, a flight will bump and bump and bump, but there will be a level whereby the bump will be felt, and like it will trigger some fear in you. Okay, that's what we call the major swing. Okay, and there are those small bumps that you will just know, okay, this is just bumping, but there are those bumps, mostly if you are still new in a flight, you will feel those bumps and you will actually get scared. Okay, at least I got scared on my first time. Okay, you will be scared, okay, during those bumps. Okay, so we take in terms of market structure, we take the same thing as those bumps that you will feel. So if it corrects in a way that you can see, okay, now it did correct, okay, now that's when we count that in terms of market structure. What I mean is, look at this. This is the low, and there is no other low, okay, until they make a high. Okay, when they make this high, okay, I'm told when they make this high, they pull back. Okay, they pull back. When they pull back here, where is our high and where is our low? Okay, I'm gonna use this ticks. Okay, this, when they pull back, okay, this remains our low and this remains our high. Why? Because we don't have a low and we don't have another high or another low unless one of the levels is broken. Either the high or the low, one has to be broken. And in this case, I'm gonna use let me select another color so that we can just show the market structure. Guys, I'm talking about a lot of things, and I just want you to understand this. Okay, I know it's too much to ask for, but please try to understand these. Okay, so here's the thing. Now let me see where that high ended. Okay, fine. This is where this high ended. Okay, this is where this high ended before the correction, and let's see what happened. I'm not using the high of the previous day. I'm using the high in terms of market structure now. Okay, so when it, you see, they broke the high. Okay, they broke this high. Okay, they broke this high, not in terms of daily breakouts. Remember, we are talking about market structure. However, you will see. Okay, fine. Now what happens is, the moment they break here, they broke this high, right? So this becomes our low. Okay, this becomes our low. Okay, and now we have another high, which is this one. This is the high before they pull back. They went up. I'm not talking about this small bumps over here that you won't even feel if you're in a flight. Okay, I'm not talking about the small bumps here that you won't even feel if you're not in a flight. Okay, we are talking about the big bumps that you will actually feel. Okay, so here you see, this is the high. From here, this is the highest point. Okay, not in terms of yesterday's high or whatsoever. This is the high. Okay, in terms of the high. Okay, so as you can see, this was the high, and then we registered it as the high. Okay, and now, okay, they pull back, but we have nothing. Okay, this is still our high, this is still our high, this is still our high, and this remains our low. let's see, this remains our low. Okay, why? Because nothing is broken. Okay, and now we see this low, but we don't record it because none of the extreme is broken. Now as they go up, you see, they break this high. The moment they break this high, the previous low is registered as our low. Okay, so we register the previous low as our low. So this is our low. Okay, this is our low, and this was our high, but now it has been broken, therefore it's no longer our high. Now we are waiting for our new high. Okay, and as you can see, they go, boom, this is our new high. And the moment you see, this is our new high, this is our new low. Okay, this is how market structure works. Okay, now you see they pull back, however we still have our low in place because neither the low nor the high has been broken at this moment. Okay, and we are not talking about these small bumpers, we are talking about the bumpers you feel. Always take that as an example. Now as you can see, they break this high. Okay, in other words, they are making higher highs and higher lows. I will show you that in a minute. Okay, now the moment they break here, okay, this becomes our recent low. Okay, this becomes our recent low, and we register it as our low. Okay, and now as you can see, this is our high. This is where we register our high. Okay, and now they pull back. The bumpers you can really feel. Okay, they pull back. However, just because they pull back, we don't register anything. Why? Because the recent high and the recent low has not been broken. Okay, as we can see, now they trade. Okay, they didn't break this high up until this point. Okay, bear that in mind. Okay, and the moment they break here, we're gonna take our recent low and register it as our low. Okay, that's how it works. Okay, market structure, highly important to understand, because people are counter trending moves that they're not supposed to counter trend. You can't counter trend a move that hasn't broken structure. Breaking structure means breaking the high or the low, and I will show you something right now. Okay, let me just complete what I'm doing. Now tell me, where is the recent? You see, this is our low. Why? Because they broke this red high. You see, the moment they break this high, this becomes our low because it's the recent bumper that we felt. Okay, so now you see, the moment they break, we register this one as our low. Okay, now let's look at something. They go correct. This is not a bumpers you will feel. Okay, this is not a bumpers you will feel. Okay, this can't be registered. Why? Because they haven't broken anything, and this is not a bumpers you will feel. Okay, we are talking about those big bumpers you will really feel if you are driving maybe on road and there are some potholes. There are potholes that you will feel, man, that this is nothing. You didn't even feel that pothole. However, there are potholes where you will feel like your car will just go grr on the road. It will grip the road. Why? Because that pothole is too big. Okay, and you will say, my car. You might stop. And just go to the back of your car to see if there is any damage. We are talking about those things that can be felt. Those bumps that can actually be felt. Okay, so now they broke here. When they break here, we register this one. Now where is our recent high? Okay, now this becomes our most recent high. Okay, this becomes our high. Okay, and the moment they break, we're gonna look at the most recent high, most recent low. Okay, now they're broken. Okay, they're broken. This one was registered because they broke here. Okay, and this one is our high. And then the moment now when they break this high over here, that's when we can register this low. This low was felt. Okay, we register this low as our low. Okay, the reason I'm explaining this is because I want you to understand the entire concept. And I know that by using different kind of videos, today you learn this, tomorrow you learn this, tomorrow you learn this, you are actually gonna get confused along the way. So I want to make one video that actually outlines the whole thing, okay? And this is gonna be the video, okay? This is gonna be the video, okay? So here's the thing. When they break here, we register this one as our low, okay? And now it goes up and up, up. You see, it goes up, okay? The moment it goes up, we don't have okay, it's still going up, it's still going up, it's still going up. We don't have that bumpers, it's still going up. So this is our recent high, okay? This is our recent high, hence we registered here, okay? So now nothing has been broken. Nothing has been broken. The moment this one is broken, that's when we will register this one as a low. If this one gets broken, then we're gonna register this one as our low, okay? Our low. We felt this bumpers, we felt it, okay? So guys, this is how market structure works. And right now, as you can see, this is a low, this is a high, okay? And this high is, okay, this is a low, this is a high. Now they made a high. This high is higher than this high. And they made a low when they broke here. This low is higher than this one. So you can see the market is busy making higher highs and higher lows. This is a high, this is a low. Make a higher high, make a lower high. 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 Make a higher high. And this one is not registered. I told you it will only be registered if they break here. They can still come down, okay? So what are we waiting to see? If say for instance, if they don't break this level, okay, and they come and break this level, what we will have will be called break in structure. Break in structure, break in structure, okay? Break in structure, okay? That's what we'll have. We will have a break in structure. And a break in structure is the first sign that the momentum is now strong towards the other side, okay? Okay, so this is what I want you to understand. I'm not gonna go back and explain the same thing. However, you can see the same thing right here, okay? You can see the same thing right here, okay? And as you see the same thing over here. And as you can see, there was a point where they broke structure. The moment they break structure, okay, it's not much convincing, okay? Let's leave it, okay? It's not much convincing, but a break of structure is a sign that now momentum is strong towards the upside, okay? And that's what we need. You see, this is a break of structure. This is a break of structure. They broke the recent high, okay? This becomes the break of structure. This is what shows you that, oh, now momentum is strong to the upside. Then they correct, and as you see, they continue, okay? So that's what we need. Once they break structure, once we have a break of structure, let me show you something, okay? Once we have a break in structure, okay, let me reduce the I don't know, okay, fine. Okay, now we have the break of structure. As you can see, they broke the high, the previous high, okay? So now we have a break in structure. This is when you can start actually looking for counter trading opportunity. Now we have a break in structure. When we have a break in structure, we have a pullback, okay? And now since we broke the structure, the next time we break the high, it becomes break of structure. It's no longer break in structure, okay? Why? Because now it's breaking structure in direction of the trend. What establishes the trend? Break in structure, okay? Now it's break of structure. It's no longer break in structure. It becomes break of structure. You see, this is now as it goes up, as it breaks, we have another break of structure, okay? Every time it breaks a high, we have a break of structure, okay? So the first sign that the market is going to go the other right direction, or might, because its probabilities, is a break in structure. And then a break of structure is something that helps you go in line with the move. Okay, so now I've clarified a lot of things. The video is long, so now we know the day count. Now we know the market structure. Okay, I thought I'd expect you to know everything in one video. You can just rewatch it. Okay, you see, every time we have a day 3, we look for either continuation or reversal, or just consolidation. So there are 3 scenarios, 3 possibilities, 3 things that can happen on a day 3. Okay, day 3. Okay, so as you can see, today was day 3. Okay, we are not looking for counter trends, and I will show you something in a minute. Okay, now let's go to a weekly template. Now we are going to a weekly template. It's becoming a bit longer, but it's fine. Okay, now we are on a weekly template. We are on this second part. Okay, because the first thing I wanted everybody to understand was the breakout in terms of day breakouts. Now we are going to talk about the weekly template. The weekly template is quite simple, guys. Okay, the weekly template is quite simple. I'm not going to spend a lot of time on this one, because on a weekly template we look at 2 things. We look at Monday. Monday is day 1. Okay, Monday is day 1, and you can only trade a weekly template if you don't understand all these other things. Monday is day 1. Okay, regardless of what's happening, Monday is day 1, regardless of breakouts whatsoever. Monday is day 1. Therefore, I will feel comfortable to push this to the second Monday. Why? Because Monday is always day 1. Tuesday is day 2. Wednesday is day 3. Okay, however, note where I am actually putting my day 2 at the beginning. Why? Because this day 2 now is going to be day 1 again, not day 2, man. Okay, sorry, day 2 is here. Note where I'm putting day 3. Okay, let me make this one day 3. Okay, so that I don't have to always edit this, edit that. I can just move it like this. Okay, fine. So now Wednesday is always day 3, regardless of what happens. On Wednesday it's day 3, and knowing that Wednesday is day 3, that means you're either looking for a continuation or a reversal, or it's gonna consolidate and do nothing. Okay, so that's what you are looking for. And just because it's a day 3 doesn't mean you have to trade. Okay, look at today. I'll show you today. Today, the only trade I actually saw, or the good trade that actually presented, was gold. Apart from gold, there was no actually a trading opportunity. However, I took gold and I took was it Audi USD. However, for Audi USD, I had to close the trade when it gave 20 pips, because I saw that it's not performing the way I'm expecting. And besides, that was highly anticipated, given the fact that today was just a clean day. Okay, today was a clean day. We didn't have a lot of, let me show you. Today was a clean day. Okay, today we didn't have news. The last news we had was in the morning, Great Britain pound. Okay, during the London session, actually on the open of the London session. So today was a little bit clean, and when it's clean like this, most currencies won't actually move that much. Okay, but most of the time they will give an opportunity. But for me, actually, I just saw gold. Okay, so let's look at this. You see, take a screenshot of this, and then this one will become day 2, and then this one, Friday, becomes day 3. Okay, for the sake of time, I'm only gonna do this on one or for 1 week, but for all the weeks it's the same thing. Day 1 is Monday, day 2 is Tuesday, day 3 it's Wednesday. However, Wednesday becomes day 1, okay, okay, and Thursday becomes day 2, and Friday becomes day 3. So on Wednesday and on Friday, you will more likely see very good opportunities, okay, very good opportunities, either as a continuation or as a reversal. Okay, let me just do this right here again. Okay, I'll put it down here. Okay, this is day 1, this is day 2, okay, this is on a weekly template. Don't forget this is on a weekly template, okay, this is on a weekly template. So on a weekly template, Wednesday, Friday, they're gonna be crazy, okay, but there are days when you'll find that, okay, the breakout started on Thursday, Friday, Monday, or it starts on Friday, Monday, Tuesday, or okay, that's why I started by showing the day 1 breakouts, day 2 breakouts, day 3 breakouts, and whatsoever. Okay, so on this weekly template, this is what you will see every week. Okay, this will happen almost every week, and this is how it should be. Okay, just know that Monday is day 1, Tuesday is day 2, Wednesday is day 3. So on Wednesdays, just know that you are on day 3. There could be very good opportunities. On Friday, know that you are on day 3. There could be very good opportunities. However, remember that your job is to hunt. Okay, you are actually hunting good setups, and that is your sole job. Don't tell me that because it was Wednesday, you actually got into something crazy because you didn't actually look for the setup. And right now we haven't touched anything about the setup. Okay, nothing about the setup has been explained. We are just talking about signal days. Okay, signal days, because as I always explain, we start with signal days, then we go to setup. If the signal day is there, we go to look for a setup. If a setup is there, we go to look for the behavior, the pattern. Okay, what's happening, where are they sending people, how many levels have they gone, where are they trading from, is it from the low, is it from the high, is it from the opening, all sort of those things. Okay, so I believe that clears everything out. So Thursday is a day 2, okay, on a weekly template, and as always, Friday becomes a day 3. So on Wednesday and Friday, you will be on a day 3, and something good will emerge. However, don't forget the day breakouts, because sometimes you'll find, okay, they give a day breakout, and you are on day 3, okay, on day 3 in terms of breakouts, and you find that Tuesday gives the opportunity, and then Wednesday just gives a day 2 continuation. Okay, so these are completely 2 different strategies, but you can use them jointly. Okay, so always ask yourself, what is happening, where am I? Okay, however, do take the weekly template into consideration and look at Wednesdays and Friday, but always look at the day breakouts. Okay, it's highly important. So guys, in terms of day 1, day 2, day 3, I believe everything is quite clear. Okay, I wanted this to be clear. If you still have questions, you can comment below, but I wanted this to be clear. Okay, so now once we know the day we are on, okay, either day 2 continuation or day 3. Okay, I love day 2 continuations, but I also love day 3. Day 2 continuations mostly, for example, if it's gonna continue on day 2, what it will do is the target will mostly be the high of the previous day. That's the minimum target. Once it's reached, you can just trail your stops and allow it to go. But this is the just because now you see it has gone too many pips doesn't mean it will always do like that. The main target will be this one. Okay, will be for a continuation. The main target is the high of the previous day. Okay, that's the main profit. That's where we take profit. Okay, so day 3s can be highly lucrative, because for most pairs, day 3s will actually move from high of the day to low of the day. In other words, the high of the previous day to the low of the previous day. Sometimes they can move from the high of the week and go straight to the low of the week, which, for instance, it might be from Monday all the way. It might be from the low of Monday, okay, they might move from maybe the high to the low of Monday. Okay, so they can move quite quick. And usually let me say this, okay, on a Friday mostly we are looking for one direction. Okay, one direction. Okay, because Fridays can go in one direction for the entire day. Okay, yesterday gold did this, we'll look at this, but most of the Fridays they will be one direction. Okay, one direction. That's how 3 days are. So crazy. So guys, I believe this is clear. I wish this was alive. Okay, I wish this was alive, and I believe maybe from next week Monday we will do daily analysis, where every day around this time I will actually do an analysis with you to see what we can expect the following day. And I don't know if it will be possible actually to do it every day, but I think the best time to do it will be on Tuesday, because on a weekly template we will get a day 3 on Wednesday and on Thursday, mainly because we will get a day 3 on Friday. Yeah, so we will do that on Tuesdays and Thursdays. Why? Because we will be targeting the day 3s. Okay, so guys, here is day 1, day 2, day 3, and right now I don't know, but I wanted, as I promised, I want this video to be as detailed as I can. Okay, so one thing I'm gonna look at right now is wait, I'm gonna look at let's go back to our thing. Okay, now I believe that we understand these 1, 2, 3s in terms of breakouts and in terms of weekly template. However, it doesn't end there. Now this is for the signal day. This is what you do to get the signal day. A signal day gives you one thing. It gives you a directional bias. Okay, a signal day gives you a directional bias. Okay, in other words, it gives you a direction to anticipate the following day, eliminating the guessing game. Okay, because you don't want to come to your charts and be guessing, is it going to go up, is it going to go down? No, you want to come to your charts with an expectation. Okay, today I'm expecting that it might go up. Okay, and if the setup is not there, then it's not there. Don't force it. Okay, don't force trade. Actually, don't force the markets to do what you want them to do. Rather, do what the markets are telling you. Okay, you have a directional bias. Okay, this is for signal days. All this that we explain right now, it's for signal days. Okay, I am feeling a bit tired, but as I said, I want this video to clear everything, because I know some people are gonna watch this one and won't be able to watch other ones. They'll skip and stuff, and that's where things start going wrong. So all these were for signal days. Okay, now we still have 1, 2, 3. Oh guys, this is crazy, and I love it. Okay, we still have 1, 2, 3 on a daily level, because as you can see, we were using a hourly time frame to see how the days are actually setting up. Okay, let me do this. Okay, now we got this out of the way. Okay, so now we are going to be looking at 1, 2, 3 in terms of the day itself. What do you look at during that day? Okay, I'm gonna show you. There are two strategies we use. I use day 2 continuation. Okay, day 2 day 2 continuation. Okay, there is day 2 continuation. Okay, I'm sorry, this video is getting longer, but it doesn't matter, guys, as long as it delivers. Okay, because I want this video to be the only video that will teach you almost everything. Okay, I don't know if I will be able to achieve this in an hour, but it's fine. And then there is day 3, and for a day 3, it's either reversal or continuation. Okay, 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 this is what we have. Okay, we have either a day 2 continuation or day 3 reversal or continuation. On day 3 we are looking for two things: reversal or continuation. Okay, so this is about on the day itself. Okay, this was a signal day. Now we're gonna be looking for a setup. Okay, we are gonna be looking for a setup. And just to explain, I've said this too many times, but I'm gonna explain it again. We're gonna start with day 2 continuations. Okay, for day 2 continuations, let me just actually duplicate this. Okay, I know it's becoming long. Okay, but let's just get this out of the way. For day 2 continuations, what we're gonna be looking for is now we are talking about what? We are talking about the setup, not the signal day or whatsoever. Okay, because we have completed the signal day right now. Okay, we have completed the signal day. So on a day 2, here is something we are actually looking for: a pump. Okay, let me show you. We are looking for two things: pump to dump, or we are looking for pump to dump. And as you see, they look the same, but they are not the same. Okay, pump to dump. Okay, remember, when market makers want to buy, they will actually drop the market. In other words, they will dump the market so that they can buy. So say for instance, we get a first green day. I'm going to start with this one. Say for instance, we got a first green day. Okay, and what is a green day? A green day is if the market actually was going down for a number of days, maybe it consolidates and it opens, makes a peak and closes high. Okay, so these actually are different days. Okay, these are different days. Okay, sorry, they're not too clear, but they are different days. And then on this day, it opened here, it made a peak. Important, it made a peak, and then it closed here. So when this happens, okay, we will be looking for day 2 continuations. Okay, provided, as you can see, this day actually is not an inside day, it's a day 1 of breakouts. It broke the high of the previous day, as you can see. Okay, so now what we are looking for, this will be the high. Okay, because we'll be coming during this day. Okay, so this will be our high. What are we looking for on this day? Because now we have a directional bias, which is a first green day, day 1 of breakouts. So what are we looking for? We are actually looking for, this is what, when we come to our market, we are expecting. We're actually expecting the market to go up. Okay, that's what we are expecting. We are expecting it to go up. So for it to go up, I told you the target for for day 2 continuation is this high. So if we are going to be targeting this high, what do we need? We need a dump to pump. That means we are expecting that market makers will actually be going up. If they're going up, they are buying. For them to buy, they will do what? They will drop the markets. They will dump. Dump, it's dump. When you dump something, you throw it away, you throw it down. Throw something, it's gonna go down. Force of gravity, this is dump. When you're pumping something, it's gonna go up. Say you're pumping a jumping castle, it's gonna go up. Okay, so always know, dump is dumping the market down, pump is pumping the market up. Okay, so this is what we are looking for. So if it's a first green day, we are looking for a dump to pump. We are looking for the markets to actually be dumped down. It could be 75 pips, 3 levels of 25. It could be 50 pips. It could even be 20 pips if the move is already strong. Or say maybe this move was under the catalyst of news. It could still have the momentum of news, where from here to maybe here it's 25. So we are looking for either 25, either 50, either 75. Okay, 75 is going to be really good, because we want to be buying. If we are expecting the market to go up, we want to be buying. If you are buying, you want to buy low. Market makers always buy low. Okay, so you want them to dump for a pump. Okay, that's what you want to see. Okay, pump for a dump. Okay, so this is what you look for if you get a first green day. So if you get a first red day, what are you gonna look for? Now we get a first red day. First red day. What does a first red day mean? Guys, I hope you are getting this. Okay, hope you are getting this. I want this video to be the last video you that makes you understand everything. Okay, if we get a first red day, that means the market was actually going up in a course of many days. Then okay, then it makes a peak, then it goes down and closes here. These could be different days, doesn't matter how many days, could be 2 or more days. Okay, so this means, okay, this is another day. This market opened over here, it made a peak and it closed here. Okay, whereas all these other days it was just opening low and closing high, opening low, closing high, opening low, closing high. Okay, so now what are we looking for the following day? We are looking for a pump to dump. If market makers are, the first thing actually we are looking for is this. We have a direction that this is gonna go down because it's a first red day, and as you can see, it broke the previous day's low. Important. Okay, so it's a first red day and a day one of breakouts. Once we get a day one of breakouts from a first red day, that's when, because I don't want to say a first red day out of an inside day, because an inside day might complicate things a little bit. It has its own setup. Okay, so now we are talking about where it's a first red day where it broke up and it made a peak. This is the most important thing. That's why I always talk about the peak here. Okay, so now we are expecting, okay, this is our target, which is the low. Okay, because we are coming on this day, this is the low of the previous day, so we want them to pump the market again. It could be 25, 50 or 75. Then if we are looking for a pattern here, and then we will be looking for it to go down and break out, because now we are expecting day 2 breakouts to be in the market. Okay, is it always going to be like this? No, sometimes it's going to fail, sometimes it's going to be an inside day, sometimes it's just going to consolidate. It happens like that. Sometimes it will give a first red day and it will the next day give a first green day. It happens. Okay, so don't expect the market to do what you want, rather do what the markets are showing you. Okay, so here's the thing, this is our target. If this is 75 pips, at least we will have 50 pips for continuation. That's what we are looking for. Okay, so you see, if it's 75 pips, it will be 1 2 3 50. It will be 25 pips, 25 pips, 25 pips. That's 3 levels of 25 pips. But most of the time, what's going to happen on this day? Let me just zoom a little bit. Let me just zoom. I'm zooming this portion, okay? Guys, I'm also tired right now. But if I stop, then I will leave a lot of people hanging, okay? Okay? Okay, let me do this. Okay, sorry, please bear with me. Sorry. Okay, sorry for this, I had to do this. Okay, fine. Now, because it was an important message and I had to respond to it, sorry. Okay, so now here's the thing. Okay, I'm zooming this portion here. Okay, this day closed here. Okay, it closed here. Okay, it closed here. Okay, and it gave a low here. So on the following day, we have 3 sessions. They might use this session, Asia, they might use London, and they might use US like this. They might just go up London, pull back, go up London, pull back, go up USA. So this is 1 in terms of session, 2 in terms of session, 3 in terms of session, and then the US might be the session they use to come and actually break out. Most of the time you're gonna see this 1 2 3 during the day. This is what we want to see. This is the 1 2 3 we want to see. Okay, and again there is 1 2 3 in terms of the pattern. Okay, this is too much to grasp. Okay, say maybe for instance they've been pumping this, they've actually been pumping. Why? Because now we are looking for a pump to dump. our trade setup is the dump. So the fact that they are pumping it doesn't mean you have a trade. You are looking for this trade. Boom, it goes straight quite quick. Okay, one session, it closes all the sessions. Okay, so here's the thing, we have a 1 2 3 in terms of pattern. Say for instance, I'm gonna zoom this portion over here. Okay, this portion over here, say maybe this market comes, okay, they were busy pumping, and during the US session they give us 1, they give us 2, they give us 3. What do we have? We have a head, a shoulder, we have a head, and we have a shoulder. This is a left hand shoulder. We have our line here where they were actually getting getting support, and now this is a break in structure. Okay, then they do this. Okay, then they pull back, and mostly in terms of pulling back, it could be, if you are using a 5 minutes or a 1 minute candle, you will see roughly 3 candles, 1 2 3 candles. Then they will engulf. This is your entry, this is your stop loss for that big dump. Okay, so this is 1 2 3 in terms of candles. Okay, so it's gonna be 1 2 3 everywhere. Okay, I will make another one actually to explain this, because now it's getting quite crazy, it's getting long, and I'm getting exhausted as well, because sometimes the 3 push won't come straight in 3 candles. You will find 1 green candle, 2 green candle, then you find 1 red candle. Okay, and then they give a last candle before they engulf, that might engulf all these candles. Okay, this now is the red candle that engulfs all these things. So it's 1 green, 2 green, they skip this one and give us a 3 green. So this is 1 2 3. But I know if I start explaining this, it's gonna get so complicated. So let's not go to the pattern. Okay, let's not go to the pattern. We will do the pattern in another video. Okay, so if you're not subscribed, kindly subscribe, because you don't want to miss anything. Okay, and by the way, I've already explained that in most of my previous videos. Just go and watch them. Okay, so now, as I said, this is what we are looking for, and that's why I don't want to go deeper into the pattern. Okay, but I think I should, but let me not. Okay, because if I do, it's gonna get it's gonna be roughly a 4-hour video, and I don't want that to happen. Okay, so remember, there we also have this. Okay, we have 2 strategies. Okay, 2 strategies: day 2 continuation trade, day 3 reversal, or day 3 continuations. On day 3, they will be violent. Either they are gonna reverse, or either they are gonna continue. So your job is to find, what are they doing? Are they pumping to dump, or are they dumping to pump? This is the setup. Okay, this is the setup we are looking for. We are looking for a pump to dump or dump to pump. Only that's a setup, because already we have a directional bias from these breakouts. We know the direction we are willing to go. Okay, or the direction we are expecting them to go. Are they always gonna go through to in that direction? No, most of the time they will. Okay, so now you need the setups, and these are the setups. Either for day 3 reversal or continuation, we are looking for a pump to dump or dump to pump. Okay, so if it's a day 3, okay, and it's a day 3 for a market that is actually going up and up and up, okay, and on that day 3, maybe this is a day 3, it could be Wednesday, Friday, or day 3 of breakouts. Okay, and they start by dumping, and they dump. Okay, maybe they find support on the low of the day. Okay, and then somebody will just expect to short this market, whereas they are showing you that they are dumping and trapping volume down. They are sending people down. The pattern is down, and you are expecting a reversal. Doesn't work like that. We are looking for a pump to dump or a dump to pump. If they dumping this market, they might surely pump it. Okay, so those are the things we look at. Let's just go to the chart and look at something. I know this last part it's incomplete, more especially the pattern. Okay, this last part is incomplete, but we are looking for these setups. Okay, and honestly, I'm feeling tired. The problem is if I leave this one and expect to post a part 2, most people might not see it, because I realize that most of the people who come to this channel, some of them are visitors, okay, and they do come and think they understand everything, just to find that they only understood a part of it, okay. So even going through the charts, I feel like it's a bit heavy right now because of the time. What should I do? Okay, I don't know what to do. Okay, actually I know what to do. Okay, I'm not gonna go through the charts, it's gonna get crazy. Okay, so today let's just say actually we end this video on the setups. We are looking for 2 setups, day 2 continuation, and we are also looking for day 3 reversal or continuation. We leave it there. Okay, we leave it there. Okay, because I will make a playlist where I will only post 3 videos. Okay, 3 videos. Okay, let me show you what I'm talking about, that people always want to counter trend. Okay, I'm gonna use the market that we have been using. Okay, so as you can see, this market today, it was a day 3. Okay, many people were looking for a shorting opportunity, but let's bring another indicator in. This indicator, it's called this is just an open of a close of the previous day. We have a high, we have the close, we have the low. Those are 3 things we have. Okay, so just look at what was happening. Okay, and in my next video I'm gonna show you how to actually filter out most of the nonsense. Okay, because most of the time people are stressing themselves, but their trade is either gonna come from the high, the low, or the low. The high, the open, the low. Okay, this is where the trade is gonna come from. How the price are gonna behave on one of these levels is actually gonna determine the trade. Okay, as you can see, this was today 15-minute chart, day 3. Most people are looking for a counter trend. I showed you there is no break-in structure showing that the market is gonna go down. Okay, nope, nothing like that. But if you look at this market, look at how they're behaving. Unfortunately, if I bring in the sessions and okay, let me just try to bring in another indicator, which is called I sessions. And okay, based on my indicator, these are the times. Okay, based on my broker, these are the times. Okay, these are the times that I actually use, and I just want a consistent color. Okay, mostly I want this green one because it's less visible. Okay, these are my times. Okay, these are my times based on the broker. You know that your broker or the server time is something you can't change, so that's what I use. Okay, so this one is gonna actually close here. Okay, and then this one is actually gonna open here. Okay, just want to set it quite quick. And when you set yours, just make sure you set it to align with your with your broker server time. Okay, I've already gone through the times and all sort of stuff. Okay, okay. I just need these colors. Fine, now we have our sessions. Okay, and here's the thing, guys, here's the thing I will tell you. Okay, here's the thing I will tell you, and this is important, please write it down. We have 3 sessions. We know we are on day 3. We have 3 sessions. One of those sessions is gonna come midnight for some of you. For me, Asia comes midnight. Okay, I don't care about trading Asia. London comes in the morning. It's 8 o'clock in the morning, South African time, and US comes around 2 p.m. okay, during the day. So for me, honestly, it's London and US, but most of the time I don't even bother trading London. Why? Because you want the market to actually set up in a good way, and you're only gonna achieve that once you have all the session lined up. You will be able to see what has been happening. Okay, this is important. Okay, that's why I'm explaining this. I didn't explain the patterns. I didn't explain the break in structure from the pattern. I'll explain that in another video, part 2 of this one, okay, because it's getting too long and I'm exhausted. But I am forced to actually talk about this. Okay, so now you know I made a video previously where I showed you timings, and we spoke about the most important time is when all the candles are lined up and opening at the very same time. When the 4 hour candle is opening, say at the same time with the 1 hour candle, at the same time with the 15, at the same time with the 5, at the same time with the 30, at the same time with the 1 minute, the market will do something on those times. Okay, so I did explain that in one of my videos, and I believe most of you did see that one. If you didn't, just go back. Okay, there's a video where I explain timings. Okay, so however, here's the thing. We have 3 sessions, 3 hours for each session. If you say today you don't understand, cut the Asian session, cut the London session, and only trade the US session until you fully understand everything. Okay, the US session is when most of the trades are gonna happen. 80 to 90% of the trades are gonna come out from the US session. Okay, yes, you will come some days and you will miss the trade that happened in the London, just to find that maybe on the US you have a continuation, okay, or a reversal. But most trades are gonna take place on the US session. Why? Because during the US session, that's when you have all the volume trapped. Okay, they have done their job throughout the day. Okay, now the direction they will be taking will be more clear. Okay, so today we are on day 3. Look at what happened. We have talked about this, where the first session actually makes the first push, the second session makes the second push. Okay, and now we know what's happening. Sometimes they will go up for a reversal. I told you, you can't come and expect a counter trend. Okay, it's either a counter or a continuation. Look at this. We are looking for a pump and a dump. Okay, just before the US session, I look at what happened. They dumped the market. They dumped prices to where? Look at this. This is crazy. Okay, let me show you something. Once you are able to identify stop hunts, you will actually be in a good place. You see, Asia stop hunted everybody who was in profit from here. Now we're gonna go to London. Then it made a first push. It made a higher high. Okay, it made a high and it made a higher high. So look, now we have the low of London. What does US do? US comes and stops everybody from the London session. You will see this most of the time. It stops everybody. Okay, they dump to where? To the opening price. Where's the indicator? I have it in my description. It's a free download. So most of the times, this is where they are gonna start moving from, either the open, the high, or the low. In this case, they come and give railroad tracks exactly at the low. Okay, exactly at the low. Okay, this is where the trade began. And now I told you, now you are only trading US. You have only 3 hours. Some of you can say, okay, I want to start from US equity opening time, which is 9:30 US time and 3:30 South African time. In other words, if you do that, you only have 1.5 hours to trade. Okay, now you have a directional bias based on like the day count, the weekly template, or whatever strategy you're using. You have a directional bias. You know you are on a day 3. Day trades are gonna be continuations or reversal. Okay, you know that, and you know you have 3 sessions. You've filtered out 2 sessions. You are left with 1 session. Okay, and now you know you are looking for the pump and the dump. That's the setup you are looking for. Okay, so you have filtered most of the things, and now if you are taking the US equity time, you're only left with 1 hour to trade, 1 hour 30 minutes to trade. How crazy is that? Okay, now all the jumping and all the nonsense is filtered out. Let's look at where the equity time opened. This is the candle that opens the equity time. This is the candle. You see, when you look at this, they've already locked the low. They've made a retracement to the low. They've traded to the low and pinned the low. This is the first engulfing candle on a 15-minute time frame. Guys, I don't know how to explain this. I don't know how to explain this. You see, they actually made it. You see, let's go to a smaller time frame. I don't know how to explain this. They've broken structure here. You see, they've came and they broke structure here. Break in structure. It was going down. Break in structure on a minor level. They break the structure on a smaller level. Okay, they broke it. This is your break in structure. This is your break in structure. Guys, every day it's the same thing. Every day is the same thing. Keep your emotions out. If you're emotional, go and read a book called Trading in the Zones by Mark Douglas. Okay, read that book. It will help you in terms of psychological preparation. Okay, you see, now they broke structure. Going back to the 15 minutes, we have a break in structure here. They trade back. This is the very last engulf. On a 15 minutes, they gave 2 red candles, but they didn't give the third one, but they gave a clear engulf. The moment this engulf closes, you don't want to be out of this move. You want to be in this move. Why? Because they've already stopped hunted. Stop hunt is important. Once they give a stop hunt, they are done with the job. They are done down here. I'm telling you, they are done down here. Okay, they stop hunted, closed everybody from the London. However, they don't want to release those trapped during the Asian session. Okay, they don't want to release them. They don't even come close. And I told you about this behavior, guys. I told you about this behavior. It's everywhere. Okay, I told you about this behavior. Just look at what they do. They stop hunt. They railroad tracks. Railroad track. Shift the zone immediately. They give you a very big bearish candle. Immediately they shifted. 15 minutes. Everybody down here is trapped. Everybody from London is closed. This is the first engulfing candle. Okay, the moment close, you don't want to be out of this trade. You want to be in this trade. And here's your stops. Here is your stops. Every day is the same thing. Okay, roughly 24 pips. Good stops. And then you can target an expansion from the high and the low. Okay, candle bodies, it gave an expansion of 2. Okay, gave an expansion of 2. You are done with your trade here. You are done with your trade. Okay, with size, you are done. You are done. There's no need to come back for a reversal because you're not gonna always get it. The fact that today you got a very big reversal back to the low of the day doesn't mean you're always gonna get it. So you don't want to catch move. This is a bad win. Why? Because this is something you won't sustain. However, this happens every day, every week. We talk about this. Go back to all our strategies. This is the only thing you will see. Every week you will see this thing. Okay, dump for a pump. 3 sessions. Now they come down to close from the London. They are been sending people up, now they're sending them down. Okay, sending them down. Look, go down. Others got it right. They went up. Okay, fine. They come and show you go down. Very big candle. They are tricking you. Okay, now you know. Okay, now you know what's happening. Okay, and this is actually not sending people up, it's sending people down. Go down, go, they break structure, go down, go down, go down. You are trapped. They give a nice expansion of 1. This is your take profit. I told you that if it's a big expansion, I'm looking for 2. If it's small, I'm looking for 3. Just look. This is 170 pips. You are done. Trade done and dusted with size. Okay, go relax, go out. Okay, this one, for those who took it, good, but this is the beginning of losses. Okay, because tomorrow you're gonna take the same thing and you're not gonna get it. Okay, the main goal is to take something that you can replicate on a daily basis. Okay, guys, it can't be more perfect than this. Goes down, go, okay, it goes down, goes down, goes back up as a pin. This makes a W. This makes a shoulder, head, shoulder. Once they stop hunted, they are done for the day. And here's a simple thing that I always show you every day. You see, trap, they come and trap again. Now they come again. However, they are not releasing everybody they've sent down. They come for the 3rd time. However, they are not releasing these guys. These guys keep wishing, if I'm at break even, I'm gonna close. Okay, however, they don't release them. This is a sign that they are going back. Okay, they don't want to release these guys. I told you how market makers buy. They buy in potions. This is what they do. Okay, so guys, this video is way too long, and I think I've managed to actually discuss 2 things using this one, and I'm left with part 2. Let me show you something. I've discussed the setup, we've discussed the setups, but we'll go deeper in part 2. Okay, however, we did show the 1 2 3. It's now clear. Okay, so guys, I will try to make part 2 and go in depth, but I believe this one has cleared a lot of misunderstanding. Just know that those are 2 different strategies, weekly template, and however, you must be able to use them interjointly. When you come to a chart, ask yourself what's happening. Ask yourself what's happening on a weekly template, because Wednesday and Friday will always be day 3s and will always be volatile. So even if you decide to trade Wednesday and Friday only, US session only, you will be highly profitable. Okay, remember, it's not about having many trades, it's about having less trades, and ones that are of high probability and high quality, and that's all it is. That's all it is. So guys, I thank you, and if you are not subscribed, kindly subscribe. Even just to like, it's free. Okay, it helps people see this video. Okay, because I'm trying to give as much value as I can. Okay, this is a bad win if you want it. It's not sustainable. This is a good win. It happens every day. Rather choose something that happens every week, maybe twice a week, maybe every day. If it's not gold, it's gonna be on another currency. However, it's gonna set up the same and behave the same, and the trades are always gonna come from this line, from the low or from the high. So just filter out every nonsense. Wait to see what they do on the low, at the high, or at the opening. The high, this is the closing, where yesterday closed. This is the high of yesterday, and we have the low of yesterday here. So always wait to see how prices are behaving here, how prices are behaving here, and how prices are behaving here. That's how you're gonna get good trades. Okay, and only take trades that are actually from here to here, unless you understand. Okay, if you understand what you're doing and the timings, then good, you can do anything. But if you don't understand, filter out all the sessions. You'll have the US session. If it's up to you, you can look for a 1st hour trade. If not, you can just say, okay, you're looking for the equity time, which is 9:30 US time, and if you're doing that, then you only have 1 hour 30 minutes to get your good trade. Okay, 1 hour 30 minutes. Okay, because it will come during the equity time, or else it will come during the last hour. If it doesn't, then you have nothing. So you have 1 hour 30 minutes. You have actually filtered out most of the garbage. And guys, you can't get it wrong. From having 1 hour 30 minutes and having all these levels and having the day count and having a pump and dump, no guys, you can't get it wrong. Those are too many confluences that actually filters out rubbish. So guys, thank you. I'm tired, really tired, and yeah, I'm trying my best, guys, and I wish you all the best. Okay, thank you.